Welcome back for another outlook on the gold market. Gold prices seem to have steadied since the start of the week, just above 1900. Yet some bearish tendencies were present during today's European session, driving the precious metals prices lower. It should be noted that uncertainty in Europe and the US seems to be on the rise given the recent resurgence of COVID-19 cases. As usual, we will try to identify the most important issues which could provide volatility for the precious metals prices, and within the analysis also blend our own opinion. Starting with the US elections, which are to be held on the 3rd of November, most polls seem to expect Biden to win, with some even expecting the Senate to flip over to the control of the Democrats. In such a case, we could see market expectations for a large fiscal stimulus intensifying, which could lead to a weakening USD, as safe haven outflows may come into play for the greenback. Such a devaluation of the USD could in turn lead to an appreciation of gold's prices, given that the precious metal is denominated in US dollars. On the other hand, Trump's chances of winning should not be underestimated. The possibility that hidden votes favoring Trump exist, as was the case of the 2016 elections, cannot be excluded. Hence, current polls could be inaccurate, as was the case back then. Also, the course of the pandemic in the US may limit voter turn-up, also messing up the current poll forecasts. Should Trump get elected, we could see stock markets strengthening in the expectations of another possible tax cut, which could also weaken the USD and in turn raise gold's prices. Another scenario which could play out would be for the election result to be delayed or even contested by one of the two candidates. Such a scenario could create considerable uncertainty, which initially could produce safe haven inflows for the USD, which in turn could weaken gold prices, at least at an initial stage. Should, though, the uncertainty persist, the USD may no longer be able to facilitate the safe haven inflows, hence could lead to the paradox that gold prices could rise in parallel with the US dollar. Yet, it's not all about the elections. The pandemic in the US seems to be on the rise once again, creating market worries over its possible adverse effects on the recovery of the US economy. It's characteristic that over the weekend the US recorded the highest number of new cases. News that AstraZeneca started trials for a vaccine seemed to have little effect, as an actual vaccine may still take some time to be released, while the damage done to the economy is more immediate. The situation of COVID in Europe seems to be even worse. Worse intensified as media reported that France's government is considering reinstating a full national lockdown in order to fight the resurgence of COVID-19. It's characteristic of the criticality of the situation that France reported most deaths since the first COVID-19 wave yesterday, while the issue expands to other European countries as well, such as Italy and Greece, while the UK is also worrying. Should France break the taboo of a second full lockdown, pressure may start mounting for the leaderships of other countries to also impose similar measures, with probably adverse effects on the economic recovery of the area. As a closure, we would like to highlight some of the US financial releases in the coming week. On Thursday, the 29th of October, tomorrow, we get the weekly US initial jobless claims figure, yet the release, which is expected to generate most of the interest, is expected to be the US GDP rate for quarter 3. The release is to indicate how much of the losses made in quarter 2 the USD was able to recover and create substantial volatility. On Friday, the 30th of October, we highlight the US consumption rate for September. On Monday, the 2nd of November, we note the release of the ISM manufacturing PMI for October, while on Tuesday, the 3rd of November, we get the US factory orders growth rate for September. Moving now to the technical analysis and goals for our chart, the precious metals prices maintained a tight range-bound movement, failing to clearly break the 1907 resistance line, and during today's European session retreated considerably. Given the intensity of the drop, we are inclined to switch our bias for a sideways movement in favor of a bearish outlook. Also, the fact that the RSI indicator below our 4-hour chart has formed a downward slope aiming at the reading of 30 tends to underscore the presence of the bears. Should the bears maintain control, we could see it breaking the 1877 line, which halted gold's drop on the 7th of October, and start aiming for the 1850 support level, which held ground as gold's prices dropped on the 25th of September and marks the lowest point for gold's price since the 22nd of July. Should the market turn bullish on gold, we could see the bullion's price breaking clearly the 1907 resistance line and aim for the 1932 resistance level, which contained gold's ascent on the 12th and 21st of October. Even higher, we have noted the 1955 resistance barrier. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.